Gold prices start the week nudging higher, but they remain in that range that we've seen since the FOMC meeting back on March 15th. We see the range of 1900 to 1950 holding. Today we ended right around 1930. Yes, we have seen a modest push above that 1950 level very briefly, and then we actually saw a subsequent move below 1900 even more briefly, but we spent the lion's share of the trade between 1900 and 1950, and that's exactly where we are today. That being despite the fact that the dollar is stronger, despite the fact that treasury yields are higher, and crypto is really not playing much of a role here. Even though they have been trending higher, they were lower on Monday. So a higher dollar and higher yields didn't stop gold prices from going higher today, and again, holding in that 1900 to 1950 range. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you will notice that since volatility peaked when gold prices got north of 2,000, it has been a shift lower in volatility as prices have declined. And now that we're in this holding pattern, we continue to see volatility shifting lower. It was only nudging lower today, but again, as we hold this range until we see some kind of a breakout move higher above 1950 or substantially back below 1900, it likely will continue to trend lower until we see some kind of a breakout move, and that clearly hasn't happened. At this point right now, it doesn't seem that the dollar or yields are having an immediate effect on gold prices as it has in the past, but that could all change very quickly. Lastly, let's talk about positioning. What are the speculators doing? Well, speculators were actually adding to their longs ever so slightly as we continue to trade this range. Speculators can tend to be, as what we call a canary in the coal mine, a good leading indicator as to price momentum. We haven't seen any major shifts in open interest from speculators over the last week or so. So it will be interesting to see if we start to see any shifts. Does that follow with any big price movements, right? Up until this point, we continue to trade that range, so we haven't seen that as of yet. So gold prices start the week off nudging higher, but holding in that range that we've seen since FOMC between 1900 and 1950.